Good morning, traders. This is a live trade recap. I took no trades today because nothing met my criteria, which is very strict for picking stocks that go on the watch list, and then I look for a specific pattern. I'll talk about all of that in this video and why nothing met my criteria. If I was trading the same way I've been trading all month, this test trading that I've been doing, there was a trade that I would have taken, and I'll show you that, and it did go to 2R, but this is kind of a funny thing that happens very often in the market, and I'll explain what all of that means. And this is something you should really be careful with and watch out for. So yesterday I showed you how to set up the screener. Right now we are looking at Webull 5.0 on my desktop. I have this open on my laptop, that way I don't have to flip back and forth through my charts and this screener. And yesterday what I showed you was to go through the top gainers and then check the float size. For example, Mosy is #1 top gainer. It meets the criteria. It's also on the top volume list, so that would go on the watch list. Now, when I was trading at 9:30 to 10, Mosy was not up here. It didn't have enough volume, so that one wasn't one that I traded, and I could show you that in the video as well. But I want to share with you a trick to make it easier. You don't have to go through this top gainers list, kind of like I told you yesterday. All you have to do, now that I've done this in real time, it's much more obvious. All you have to do is look to see which stocks are gaining over here on the volume chart, and then check their float size. Let me click on it. There we go. So this one doesn't meet the float requirement, so that doesn't go on the list. And then Lpth, that one meets the float requirement, so that goes on the list. And now Mosy does meet the requirements. It didn't earlier because it wasn't on this list. So that one could go on the watch list if it was between 9:30 and 10. That's my rule. You might have a different time period that you trade in. All right, so now let's take a look at the charts that I was looking at when I was trading. I'll go to my customized layout here. Lpth was really the only one. Let me go back to the 1-minute chart and show you the reason why I didn't take any trades. Now ADXS is finally breaking up through, but this doesn't meet my float size requirement anyway, so that was up there kind of by mistake, really, to be honest with you. But I didn't take any trades with it anyway, so I figured out pretty quickly that it didn't meet the float size requirement. And believe it or not, you can't just simply like delete the chart. You would have to just open up another one, so I just left it up there. So anyway, Lpth was really the only thing up here that meets my requirement. I have all the major indices up here, and then I was also looking at my swing trade with SPLG, so that's what these are. But the Lpth would have had to break out through its previous high. You can see back here it made a high right after the market closed yesterday. And my requirement says that if the stock isn't trading above its previous high, meaning the pre-market or the day before, then it's not strong enough for me to take a long position trade. And you could see all it did was kind of sell off throughout the day. There is in fact a 2R trade over here right there. If you got in for the break of this candle, you would have made a successful 2R trade. And yeah, of course that's going to happen sometimes, but you have to be willing to let some of those go by, because more often than not, when the stock doesn't meet all of your criteria, you're going to get into a trade and it's going to go against you. So I'd rather miss some of these once in a while and just be more selective. That way the trades that I do take have a much higher probability of working out. So I've been doing that so far all month. I've been waiting until the stocks break out through the previous high, and I'm still like just above break even. I'll show you my old trade tracker from the testing that I've done so far in just a moment. Now, here's the interesting thing. I went and opened Webull 3.0, and I did just like I've been doing for a very long time now. I went to the Markets tab, Top Gainers one day, selected all, and then I looked at the top 10 by volume that met my float size requirement and price requirement and made a watch list. Now, the reason why I'm not doing this anymore, just in case it's not clear in my previous videos, is that I was doing this under the premise of thinking that I was looking at the highest volume stocks traded as well as the top gainers, but that's clearly not the case. It was really more obvious yesterday than it is today, but if you look at the screener here, these are the highest volume stocks traded, and obviously when you're in a sell-off, those aren't going to show up on the top gainers list because they're not gaining, they're losing. So I'd rather have the stock be on the top volume, top gainers, and meet all my requirements. That way, you know, it's one more factor that is going to increase the likelihood of the stock continuing in the direction that I want it to go, which is up. So that's that. So let's look at the watch list that I made Webull 3.0 based on my old criteria that I was doing yesterday. So LPTH still got on there, and ELOX got on there. There's no way I could have taken a trade even as of yesterday because it just broke out at like 10:20, so there would have been no trade there. Same thing with CERC. It didn't break out through the previous high, so no trade there. So far, even though there's 2 more stocks on here, there would have been no trades, but MOSY would have been on there from the way that I used to trade yesterday, and it's kind of covered up behind the red line because where the hypothetical trade would have been is also where the previous high is. So it broke out through the previous high about 953, so it just gave me the signal to look for an entry based on my old strategy. And really not my old strategy, same strategy, but different criteria for picking stocks. It pulled back on this one candle just by 1 cent, right? So this is not, technically this is not a pullback candle, it's a red candle, but because this thing is higher, 457, and this one only went to 456, that's still a pullback in my eyes, kind of maybe if you want to call it a micro pullback or whatever. But anytime the next candle is lower than the previous candle, it is a pullback. So my criteria says to enter after the very first pullback. That way I get in as low as possible and I have the highest probability of the trade working out. So I would have got in for the break of this candle. It's 456. Let's say hypothetically that I get 457, the ideal entry, which I may have gotten 458 or 9 or whatever, and it still would have worked out the way this thing went. And then my stop loss would have been 1 cent below this candle, 438. So I typed that into the 2-hour calculator over here actually, and my profit target would have been 495. The risk would have been 4.16%. Here's the profit target right there. It would have been hit, and it did go a little bit further than that. So that would have been a successful trade, but this is really where you need to be careful trading stocks or probably anything. Is that this happens, I've been trading over a year now, I've seen this happen so many times where I figure out maybe a problem or something with my strategy and I change it. And before I used to change it after just maybe a few bad trades or something, but now I've been trading this system for this entire month and over 45 trades now. And really the reason I stopped doing it is not so much because of the win rate being just above break even, but because the premise behind it was flawed, and I'll explain that in just a second. But the point I'm trying to get across is that just because all of a sudden this presented a great trade that went to 2R very easily, don't fall back into your old ways if you've already decided that system isn't going to work. This really isn't going to make that much difference in the grand scheme of things. It's just one single trade. So let me tell you, let me show you the old spreadsheet of the 100 trades that I was going to take, and I only ended up taking about 45, and I'll explain why I stopped that. So this is the old spreadsheet. I actually threw a 100% in there for today just to see how it would affect the numbers if I would have taken that Mosy trade based on my old criteria. The average of all of these win rates is 36%, and my break even is 33%, so just a little bit above break even. This is the most accurate for what I've done all month because this includes every single trade I've taken, winners and losers and error trades and all of that. So it'd be just about 35% after that Mosy trade. And without any errors, if I was, a perfect trader and I didn't make any mistakes and I just traded the plan and the strategy as it was, I would be up at almost 40%, which is really good. But chances are you're not going to trade perfectly, no matter how much practice you get. So an interesting number to look at would just be to average all of those together, and it probably would be somewhere around 36.5, maybe 37-ish%. But now let's take a look at just where we were as of yesterday without that trade. There, that number updated. So instead of 16 winners, we had 15 winners out of 45 trades. And here we had 14 winners out of 38 perfect trades. So this is where we were as of yesterday. And then the reason why I decided to just chuck this whole idea was because this idea was based on the premise that when I went to the markets tab and then I organized that top gainers one day, organized it by volume, that I'm just looking at the top 10 most traded stocks. But obviously, I showed you earlier that's not really the case, because there are many stocks trading with much more volume that are also selling off. And I think that's really an important consideration into increasing the probability of your trade working out. You're going to have a ton of stocks that are trading with less volume than these stocks on your list. And you're basically trading against the market, because obviously the market is selling off today as a whole, and you're looking for opportunities that are going against the market. If you're a risky, gambling type trader, you may want to do that. But that's basically what I was doing, not thinking, that I was being all that risky. But that's what I was doing for this entire time. And you could see my results were, not that great. And this is a lot of work. This was a lot of work to take all these trades and look for these entries. There's a lot of trades here. They're not just what you're seeing here on this page. 40-something trades in the last 2-3 weeks. So it's a lot of work just to be break even. And to me, that's not really worth it. So I'm trying to come up with a system that will keep you from trading unless there is an extremely high probability of the trade working out, at least better than 50% win rate overall, because the plan also has you trading with 2R, all or nothing, which means that you're always looking for a profit target twice your risk. So two losers can wipe out one win, or sorry, one winner can wipe out two losers. So either way, if you're above 33%, you're in the profit. But if you're, say, making, if you're at 40% or something, you could be still very close to break even, especially if the risk isn't exactly the same on every trade you take, which that's not going to be the case. And sometimes you're going to get slippage and things like that. So the 33% break even is theoretical. You might have a 35% win rate and be red. You might have a 31% win rate and be green. So, there are a little bit of variability built into that based on each individual trade. But, ideally, you would rather be closer to that 50% mark. That way that, when you get slippage and things like that, you're still guaranteed to be in the green. So that's the idea behind this strategy. And really the criteria to look for stocks is that they're on this list, they meet the float size requirement, and they would obviously be a top gainer. So this list is a little bit superfluous at this point. So anyway, hopefully this was helpful to you, and let me know in the comment section below what you think. I'm sure that there's going to be some people saying, oh, you idiot, you should have taken that trade on Mosy, but it didn't meet my requirements, and that is something that's going to happen no matter what trading system you have. Eventually you're going to see trades that happen that you could have made money on, but they didn't meet all your requirements, and you have to let them go, because if you keep doing that over and over again, I've been doing that all month and I'm barely break even. I really don't want to work this hard and just be break even. So that's what I'm trying to show you guys here, is that if you want to be able to just take a few trades here and there that have a high probability of working out, I think this is going to be a much better system. Otherwise, you're going to be taking a lot of trades, but you're not going to be doing that well. And to me, it's just not worth the work, and it's not worth the risk of putting your money out there that often in the market. So again, no matter what, always have a plan going into every trade, no matter what system or criteria that you trade with. Honor your stop losses, take them every time, no matter what. Honor your profit targets, and in the long run, you should be green. Take care.